Good morning, everybody. This is Brian Caprice. I'm going to be hosting your Monday morning market breakdown. For some of you, it's good to see you guys again. This is the third session. We'll keep running these on Monday mornings. We've had some pretty nice chart setups and things like that. This week's a little bit different, but what we'll do is we'll run down what we have. I'll go through the top 3 news releases of the week, things that you should be looking for, and potential ways that you could play them. For those of you guys that don't know me, for some of the new people here, I'm an instructor over at Major League Trading, and I'm also the co-founder of Major League Forex. I have been trading for a while. I actually started back right around where the tech bubble was. It was, kind of one of those like perfect timing, get in just as the market's crashing. And I've been doing it for a while and traded a bunch of different asset classes, stocks, traditional options, futures, Forex obviously is my main forte. I found Nadex about a year and a half, 2 years ago, and really jumped into it. And I loved a lot of the things that Nadex had to offer. Was always a very, very big fan of options. And when I found this, I could kind of blend this with multiple asset classes and things, and it just was a great fit for me. So I dove into it. I started creating courses. I created the 30-minute trader program as well as a 5-minute binary course. Did work in the advisory group of one of the top 3. I won't say the company, but they are one of the largest ones out there at this point. Was there for about 2 years and realized it really wasn't what I thought it was, and really turned my focus towards teaching people. I love the actual, I come from a family of teachers, so this is a way for me to blend my passion with the markets with helping other people. Traveled around for a number of years, met my wife, traded both in the US as well as in Canada. And this is the family. The little one just turned 10 months, and my 2 sons, they're both 8. So they obviously keep me busy, hence why I created a 30-minute charter program as well as a 5-minute binary course for people that are on the move. So that's kind of me just in a nutshell. I will apologize right now if my voice goes in and out. I do sound a little bit hoarse. The boys had a lacrosse tournament yesterday. I am one of the coaches, so I lost my voice, I think, mid-second game. So if it goes in and out or if I'm drinking, I do apologize. I'll try to keep it as best as I possibly can. So with that being said, let me run into the disclaimer real quick. Anytime we talk about the markets, we have to have a disclaimer in there. Now, trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here today is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instruments on Nadex or elsewhere. Now, any trading decision that you make is solely your responsibility. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes including Forex, which we're going to talk about a lot today, stock indice futures, commodity futures, as well as economic events. Now, trading can be volatile and investors risk losing their investment on any given transaction. However, the design of Nadex contract ensures investors cannot lose more than the cost to enter the transaction. And Nadex is subject to U.S. regulatory oversight by the CFTC. Now, for me personally, I always like to point this out. One of the things that drew me towards Nadex the most was that last paragraph. Really, I guess the last sentence, the fact that you could trade so many things. But the fact that going into a trade, you know exactly what your maximum risk and what your potential maximum profit is before you even enter the trade. Huge, huge, huge. I don't care if you're a futures trader or a stock trader. Understanding those benefits is huge, and that's one of the things and the reason why I'm so supportive of Nadex. Now let's go into the upcoming week. Can't believe we're already into March and it's halfway through. Tax season is upon us, and corporate tax deadlines have already started to pass, and personal ones are literally a blink of an eye around the corner. So with that being said, these are the major news releases of the week, the top 3. I will dive into the full week in a second. Obviously, Wednesday, March 20th, 2 p.m. is FOMC. If you guys don't know what FOMC is, that's basically where we talk about interest rates. Interest rates control everything. Interest rates control the price of the dollar. Biggest thing they control, obviously, is the stock market, right? When interest rates go up, the stock market tends to go down. People keep, everybody is, listening for what type of, is it going to be a hawkish? Is it going to be dovish? Really kind of, when is the next interest rate coming? That's what everybody wants to know. It's not predicted to be this time, but the language of when it will happen, the market will start to react immediately. And it could strengthen the dollar, it could start crashing the stock market, or vice versa. So it's obviously a very, very big time. A lot of times the market is prepared for it ahead of time. So that's something that we're going to break down of where you can position yourself and potentially how you can do it. Now, number 2 is going to be on Tuesday, and it's called tentative because it's Brexit, and in quotes, again. So if you were watching the markets last week, you'll know that we had, 3 Brexit votes last week, 1 the week before. So Brexit is approaching a deadline, and this thing has the ability to send the markets up, down, sideways. I mentioned last week, with having three different votes, I, I'm a big believer in the fact that they're literally going to not have an official kind of true 100% decision until the last minute. They're going to procrastinate. They're going to take this to the very, very end. It's going to be for political-based reasons to undermine May. That's just what politics is these days. They don't care about certainty. I'm actually waiting for the euro to throw them a curveball and say, nope, it's going to happen like this. And at this point, they can't really, it's really up to the euro. So we'll see. But that's going to be a big one, because if there's any type of language or anything that is actually of significant news, there will be some major movement, most likely on Tuesday, as there was last week. We actually had, a couple of good potential or potential kind of areas drawn last week, and I'll show you those. Third is going to be on Friday. Friday at 8:30 is a magical time. You typically have U.S. news as well as CAD news overlapping, and this week we have CAD CPI and core retail sales. So if you're able to be around, that's going to be a good time to trade. You will see some CAD movement with that. Last week was kind of a CAD light news week, so this week it should be a little bit better, a little bit more information there. But those are going to be the top three that we can trade. Let me go through kind of the grand, the grand vision here for the week. I don't know if you guys are familiar with this website. If you're not, get over there today, dailyfx.com. When you go on this kind of top slider bar, come down and go across the charts and go down to economic calendar. When you click on that, it'll start looking like this. Now, first thing you should do is always go over and set the current time to whatever your time zone is, so that way you guys have the correct numbers across of when the releases are going to come. And also drop down to filters. For me personally, I remove Mexican peso, but I do leave China up here, even though I do not trade the Chinese currency. The reason I do that is because any Chinese news will affect the Australian dollar, okay? Because they are growing and they need resources, that's linked with the Australian dollar, okay? I also remove low. If you put low up there, you're going to have 8 million of these things. You don't really need them. Even some of the mediums you may not necessarily need, but it's nice because you don't want to necessarily miss anything, all right? You guys can see that there was some news last night. Going into Monday, it's not really a huge day. It's considered all mediums. 10 o'clock we'll probably have a little bit. People are going to be digesting things from the weekend, and Mondays are typically slow. And again, it's housing data for the U.S., so not necessarily a huge mover. Now going into Tuesday, that's where you can see we had some of our major news. Again, Brexit is not listed on here because it is a tentative release. So it's kind of hard to get an exact, this website is based off exact numbers, but you will see that there is Euro data here, surveys and expectations, particularly for Germany. Germany has a lot of, if you guys didn't know, Germany has a lot of kind of push and power inside of the Euro from being one of the larger industrial economies in the European Union. So whenever you get anything that has German on it, you can definitely see some movement. You see a lot of pound stuff earlier in the morning. We do have factory and durable good orders. That may give us a little bit of a bump for U.S. traders, but it's probably not going to be a major mover. You could probably expect maybe a 30-pip move, but most likely, as long as these two are kind of in agreement, they're both positive or both negative, it should start a minor kind of time. I'd say maybe in currency land, you're talking about maybe a 20, 30-pip kind of minor trend that kind of comes from those two. That's typically what we get. Now, Wednesday is a big day. And actually, there's a lot of things going on Wednesday. You'll see pound pricing very early in the morning, and then we jump in around 2 o'clock for the FOMC rate decisions. Now, again, it's not really expected to change, but it's more the language that occurs about a half hour after. So the rate confirmation, or basically the rate release, is at 2. At 2:30 is the kind of press release on it, and that's where you see a lot of the language. But the markets will start getting volatile, and just a word of warning on that one. I'm very risk focused. If you have positions that are on and you're positive, again, do what you want. You trade your own accounts. Don't let anybody else trade your accounts. But what you should do is, especially when you're positive in those positions, start looking about, protecting your profits, because anything could happen. They could make a surprise kind of change here. If they make a surprise jump, the first thing that's going to happen is the stock market's going to pop down. It's going to collapse pretty quickly. Because higher interest rates are traditionally not good for the stock market. So just be careful, protect the profits that you have, and that's going to be a big one for that day. Now, there is also Australian employment data. This has actually been a pretty nice mover. At night, we're seeing 40 to 50-pip moves based off of their employment and unemployment rate data. So this was probably, if I had to do a number 4 and a number 5, This Australian data at night. If you guys are not trading at night, understand that currencies is a 24-hour market, basically Sunday night to Friday evening. This is definitely a potential setup with news. If you know how to trade news, I love trading news. This has been a pretty nice one to trade lately. Okay, we've had a number of students do, are very excited about these at night now when they started to look at it. Going into Thursday, Thursday starts off low. Again, you don't really see Swiss news too much, but if you are awake in the middle of the night, or if you're a West Coaster or maybe overseas, this could be a little nice mover for dollar Swiss pairs. A little bit lower, you guys will see again bank rates, and again, I don't expect this to change this week, but there may be some language in here that will lead you to believe that they are going to raise it. I just think right now they're so focused on Brexit that it doesn't matter what any of the other pound news says. It's all going to be minor compared to Brexit. Okay. Going Friday, that's where we talked about. You can see the 8:30 price moves over here. Nice thing about it too is it typically is piggybacked with U.S. data. Okay. Now again, it's manufacturing, composite data, wholesale inventories, existing home sales, that kind of stuff. So it's not like it's major U.S. news, but the big pop on Friday morning would be this this consumer price index. Okay, and the CPI data right above. The fact that European traders are leaving the market typically opens us up to kind of a pretty nice area here. All right. So with that said, let me minimize these and let's jump over to charts. So what I like to do is I will run through a couple pairs and I'm going to match these up based off of the Nadex currency pairs that exist. Obviously, there's more out there, but we're going to keep these in the Nadex-based pairs so you can find potential setups for yourself. Now remember, just as you saw in the disclaimer, anything that I put up here is for education purposes only. It's things that I'm looking at. I'm not telling anybody to trade here. If you guys want to take them, that's entirely up to you. All right. Right now you can see, at least in the Aussie yen, a couple of really, really slow days. And we've marked off this red area. It's been there for a while. I mean, it's since December when it was formed. It's been a pretty strong selling area whenever prices come back up to it. Now, last week, we had this kind of gap area, right? We had this kind of piece at the top, very, very strong gap down. And we talked about filling that gap from Monday morning, which was here, all the way back up. And it was a very slow trade, right? It went up, it grabbed some more buyers here, went up, and up. And finally filled later in the week, back on the 15th, which would have been on like Thursday night to Friday morning is when we finally filled the gap from last week. This week, really not as much of a gap. Obviously, we had a very large drop. Now, with that being said, we are up back in this kind of upper range. When you're looking at a chart, you'll see people run channels or Bollinger Bands. One easy way to look at the charts, though, is the market doesn't like to typically run in one direction too long. And there are areas where there are tops and areas where there are bottoms. For me, I'm looking at this top area where we're right now, kind of in this zone. This is an area where we previously have seen price really kind of start its launch straight down, right? Very, very large bearish candle, big gap, and that's where we're back up to. It's also just shy of where the daily kind of sell zones are. So for me, for this week, I'm already starting to think about how I could probably get in short. Now, and again, it is a very kind of not a very, very heavy Australian news week, but there is some nighttime news and there may be some smaller moves in this one. Right now, there's no signals. Obviously, I'm not getting short right now, but what I am is looking for short setups on my lower time frames right now, particularly because we're in a 4-hour selling zone and we're pretty close to a daily. All right. Now, ways that you guys can play these things, particularly on a weekly basis. And like I said, I am not into these, but there are definitely weekly binary trades that are pretty attractive out there. There are no, obviously, if you guys are trading touch brackets, there is not touch brackets for this yet. There's only 4 current touch brackets, and correct me if I'm wrong. I know with the next moderators, I know they were looking at adding more, but last week we talked about adding them for Brexit trades, and they would have been great if you guys tested them in demo. This one you can't test, but you can go after binaries for the week. Some pretty nice setups if you guys aren't trying the weekly binaries, but this would be one that I'd be looking at putting something in. Keeping your risk low, understanding that whatever your cost to get into the trade is what your risk is a great way to kind of take advantage of this one. But again, for me, it needs to move just a little bit more. I'd like it to pop today, get up into the daily zone. That would give me kind of 2 confirmations on a daily and a 4-hour to take this one short. Dropping down, let's go to Aussie dollar. This one's a little bit different. Now, the Aussie dollar has kind of been in. I marked this off for my students on Thursday night, talking about how we've really been in. If you guys look here. You guys see how we've been kind of in this kind of upward kind of channel, right? Same thing. You can kind of see it on the lower time frame as well on the 4-hour. We broke below this kind of large drop, and although we're right above where we had some basing, we really have kind of a clear path up until we get into this 7140 area. So for me, this is something I'm looking at pullbacks and looking to continue this, this upward channel. Now, you guys will see I had this large green box. This large green box was formed from this super, super crazy candle. For those of you that aren't aware, this candle over here was about 277 pips. Now, the ATR, the average true range during that time frame on the daily is only about 54. So this was a huge, huge, huge move. And typically when we see that, it wipes out all the kind of electronic and fixed orders that are in the system. It's something you want to look for, okay, whenever you see a parabolic move like this. Now, we've flirted with this area a little bit, and it really just came down to the base of it, right, where we saw this kind of drop, this really, really far kind of run down, up, and then we based. And that's where price has come to. So one thing, we're not there yet, but if we get one or two nice candles to the downside, mark something like this off on your radar, okay? Basically below this low, all the way down to the bottom. Now, we're not there yet. We are up. We are in a level of basing. We are following this channel, up. Eventually, this price will start to just go sideways, and it will break the channel by sideways movement, which is not as fun. I do like when it's in a downtrend and it breaks through the bottom, not just breaks sideways. Hopefully, we get that in this one, and it doesn't just go sideways like what we saw last week. But for me right now in this one, we are a little bit farther from any sells to the top side. We are hitting levels of basing, and we are following a channel. So for me, not quite ready for this one. I actually do like the Aussie yen better. Now the next pair on the list is going to be the euro pound. This euro pound is going to definitely have some movement this week. Last week, let it finish loading. Last week we had a couple things we talked about. We talked about this bottom area right below where price was, down in the 84, 80-ish area, being an area of very, very strong buying. And we also marked off this green area. This would have been what, the 12th? Let me see, was this for you guys? Yeah, nope, actually that was for my other group on Tuesday. Basically, we talked about seeing a ping pong effect. And this ping pong effect, you guys can see with this up, back and forth, we had marked off this green area. It's been an area where we had seen previous buying, right? It came, it went up. Then when it was broken through, a lot of times you see these areas of buyers become areas of sellers. And we talked about, listen, we've already bounced. It's already shown that it wants to. This is back on the 4th. And right here is where we were last week. We were at the very, very top. And we said, because of Brexit, okay, depending on whose news is, being published, right, whether it's positive or negative for the pound, expect to see kind of a more or less a ping pong effect. And we saw it. It went down. It went right back up into the area. And then it ping ponged, bounced off this lower zone, went right back up again to the same area, sold again, came back down, and is now kind of bouncing. All right. You guys can see I marked this off for my students on Tuesday nights, but look at here's the effect on the 4 hour. Up, down, up, down. And in reality, if you look to where this first movement was, this kind of basing from back here, price really hasn't moved much, but there's been a lot of movement back and forth. Looking at just this drop down, you're talking about 194 pips on the euro pound currency pair, and it technically only has about I'd say probably 65 to 70 pip ATR normally, but it's already up to 82 just because of the ping ponging effect. Okay. Now, nothing's changed with Brexit from a week and a half, 2 weeks ago. They still don't have any true exit plan. They really don't know what's going on. And this is something that we can expect to see this week as well. Hopefully tomorrow is going to be the vote that ends all the votes, right? But technically they aren't being, forced to leave until the 27th. So we could technically have a vote tomorrow. And then there technically could be another vote on Thursday or Friday, again, if nothing is truly solved tomorrow. So, understand until this one is fully kind of, decided about, is it going to be soft? Is it going to be hard? What's going on with Ireland? Is the European Union just going to throw them out and say, hey, guess what? You're in trouble now. We're not really going to see too much, true trends, and that's why we're going to see, you're going to see ping ponging back and forth. So look for something similar tomorrow. That's why the tentative time does matter. Right now, it does look like it's starting to push back up, most likely into this area of the 86, probably 30 area. This is the one, actually, it was the pound yen that I said used. No, it was the pound dollar we used the touch brackets on, but it's a very similar, very similar kind of patterns that you're seeing on either one. Definitely on this one, if you guys don't have it marked off on your chart, mark off the 84.80 area. And if you haven't already, mark off the 86.22 to 86.53 area. This kind of 30 pip zone up here. It's basically news is bouncing between these two areas, so it's important to have those two. These two blue lines are something I was working with my students with, so just ignore those for right now. But definitely mark off this top and bottom of an area for whenever there's any type of, you know, this guy says this, May says this guy says this, and you'll see this kind of, ping-ponging effect back and forth. All right. Now for me, Brexit, again, I do a lot of currency trading. For me, Brexit, I've been doing it solely with Nadex just for the fact that my risk is limited going into it. Okay. One thing to make sure you guys understand, when you guys have stop losses on in traditional currencies or futures or in any of the other markets, a stop loss is not a guarantee to get you out at a specific rate. Okay. If you had a stop loss here and price, gapped all the way down like we saw, your stop loss doesn't get you up here, get you out at the top where your stop loss was. It'll get you in where the orders are down here. So you can technically lose more than what you plan to lose. Nadex is not like that. So for me, for Brexit trades, and if you guys are going to trade Brexit this week and take advantage of this ping-ponging effect, again, Nadex is the best way to do this. And for me, I've been using the binaries, using a little bit farther out of the money binaries, so there's a little bit smaller risk, okay? And that's what my recommendation would be, is if you're going to take it, going to try to get in here and trade these, look for your areas of support and resistance and trade these back and forth. Again, I expect to see more channeling between these two levels. With that said, let me jump down to the next Nadex-based pair, which is Euro Yen. Euro Yen, same thing. It had a couple big days, right? We had so much time where we were just, basing, really kind of going in a sideways channel. And then we saw a parabolic move. You guys see this one big red candle? Now, this red candle was 187 pips. And this pair only has, if you guys can see it up top, has a 75 pip ATR, meaning on average, it moves 75 pips a day. So when you have something this large, right, moving 179 over double what your ATR is, that's called a racetrack at Major League Forex. Okay, I didn't create the term; it's a term that I got from another instructor, and it's just melded in my head. But that's called a racetrack. Okay, you typically see a lot of retraces, and that's what we saw last week. It ground up, and went all the way through this box that we had marked off, back to this level. Okay, now what we're seeing now is we're starting to see this to the point where we've had what, 1, 2, 3, 4, 5, 6, 7 days of green straight up in the air with no pullbacks. Okay. On the daily, on the lower time frames, you guys can see it's impulse correction, impulse correction, impulse correction, impulse correction, and it's doing what it's supposed to be doing. I mean, it followed this trend line, right? Impulse correction. And again, this is what I talked about. This is a sideways break. This is not a break through the bottom of the trend line, but this followed for the entire week. Very, very strong, and then went across. Where we are now, okay, and the reason I have this zoomed out is you see this big level of basing? That's where we're at right now. We need to see this start kind of figuring out what the trend for the week is going to be. Have not gotten it yet. So last week, we knew going into the week on Monday morning that we just had this major drop down, and it fell into an area where we had seen previous buyers. Now we've rallied all the way back up, and we're very, very close to another area of basing. If I had to mark this area, this top area of basing off, it would be basically here. Okay, so we're not quite there yet. We have about 15 pips before we reach it. And again, a little bit room to go, sideways movement. Okay, so right now there's really no momentum. We're waiting for kind of it to pick a direction to take it. I wouldn't be surprised if it does kind of pop above. You can see we have a bit of a shorter term, kind of trend since, last night. If we pop on top, I wouldn't necessarily be surprised, at least until it pushes up, but it does have to clear a lot of basing. So for me right now, not too much in there. I'd like it to go a little bit higher. On the daily, I am expecting a pullback. It's very rare that you see this many green days in a row without any type of pullback. For price to go higher, typically it needs the pullback to grab more orders to go north. Okay. At the same time, we are approaching the top kind of area. You've seen, we zoomed back. You guys see there was this large area of basing, pops, based, and dropped. Came back up about to the same level of this base, the start of the move, and dropped. So daily area is setting up. It needs to go a bit higher for me to start shorting. 4 hours, same situation. And again, if this gets back on the trend, that will push it back up to the kind of 128.05 area. That's where I'm starting to look for potential shorts. I don't really like anything to the downside on this one right now. There was a pop, but there's a base below it that's not too far. Again, I wish I could say that I love this one, but I don't necessarily love this one back to the downside like I did last week. So for me, not too much here. I may place, shorter term trends on this one. Euro dollar, let's look at this. So there is some European news this week. The euro has moved quite around a bit. Um, we had this basing zone right here that I marked off on, it was Tuesday night. This kind of pullback area. Okay, this was very similar trade to the last one. You guys see this big parabolic move down. The ATR on the 4 hour is about 20 to 25 pips, and all three of these moved. This was like I think a 63, a 64, and I'm sorry, a 65, a 53, and then like a 57 or something. All of them were over double, almost triple what the ATR is for this time period, meaning this is a parabolic move. Same as the last one. This one was just a little bit cleaner. Came back up, bounced off of this zone down, and then pushed. Okay. I was using this pullback area as a potential buy area to re-enter a trade, and that's what we saw. This kind of pullback at the basing level, pulled back and went forward. Here's one, here's two. So now it's pushing higher. It's going towards the top side. Now, it's a very similar image in the fact that on the euro dollar, it is pushing high to here. We're not quite there where I like it yet. It's very, very wicky top, so it's really not the most beautiful trade, but it's got a little bit of room to run as well for me. Same thing. We broke through this base finally. You guys see this kind of pushback from the base, pushback from the base from here. It's going higher. There's not a lot stopping it here. So for me, a big area is going to be this 114 area. Okay, we're at 113.57, so we got about 40, 45, 50 pips to go. The daily ATR on this one is 58. It's obviously come down, and again, there's a little bit of chop in here. Typically, that's a little bit higher. So for me on this one, kind of a similar situation to the last one. I needed to run a little bit more. I don't know how many. Last week, my poll was I asked how many of you guys were trading touch brackets. Do me a favor, answer this. How many of you are looking at 2-hour binaries and trading the 2 hours, particularly in currencies or even in any of the other assets? Let me know. I'd like to hear you. When I see things like this, where I just need a little bit of kind of movement up, for me, 2 hours are the binaries that I'm going to, just because it's a lower entry of risk basically because the strikes are closer. Okay, you don't need as much movement to hit your full profit. You don't need 50, 60 pip movers. You don't need to jump. Your 3 strike prices are much, much closer, and you take advantage of higher volatility times. 2 hours for this week. Yeah, okay, so a couple people have wrote in. Yep. Okay. Yep. I'm just checking this. Okay, good. All right, so there's some of you guys that do it then. Yes. Absolutely, without a doubt, you guys should not be looking at just dailies. Look at your 2 hours when the markets are not moving as much. During very large times of high volatility, for me, the 2 hours are the way to go. This will be one that I'm looking at small 2-hour increments. Most likely, what I will do as well is I will shift my 3 charts. My top chart, my larger time frame chart, will become the 4-hour, and then I will use most likely a 30-minute and a 5-minute to do my kind of minor and near-term trends. That'll be the way that I handle these. I won't be able to cover that today, but maybe next week I can go into that one. But I want this one to run a little bit higher. Looking at it right now, I am definitely a little bit more bullish. We'll see what kind of when the U.S. traders get into the market, if we can continue that. Dropping down to the pound yen. This was the big one from last week. You guys will see we marked off these blue areas, and we said this is where Brexit could go, and it did. It went up, it went down, and it went up again. It filled the box to the top side. This was the touch brackets that we were talking about, being able to complete those, trying those on demos if you hadn't done it already. Actually, I'm sorry, that was on the pound dollar. That's the next one. This was just the spikes up and down with the smaller binaries. Now, we are stuck at the top, and you guys can see we're somewhat on a cliff over here, right? So for me in this one, I am definitely looking more bearish. And again, this one may be something that I look at in depth a little bit more and take down. The reason why I like it is because this up run, we had about 16 hours of nothing but straight up. Not a lot of pullback, and we're making lower highs at this point. For me, trends are defined by, where they're higher highs, higher lows, and then vice versa, lower highs and lower lows. And we're not seeing highs. It's not pushing any higher. And it was in this area on the daily of selling, right? It pushed right up in there. It gave it its best shot. It went sideways. It couldn't move any further. And we had another green candle where it attempted to go higher, but it didn't go any higher. You guys can see where it had a failed high here. And now it's starting to push back down again. So for me, I'm looking at shorts on this one. Most likely, if you're not already in or you're not looking at them, I've looked at spreads slightly, but I was gone for the lacrosse tournament all day yesterday. I'm going to be looking at spreads to the downside on this one. as well as some weekly binaries. And again, a lot of this too will depend on Brexit, but you can have a large move. I mean, this one has 160 pip ATR. A Brexit move will be, I mean, if you guys look at what the moves were, I mean, just this green candle was 381 pips. Okay, so there is a lot of movement. For me, marking these blue areas for my students, we were looking at, basically out of the money binaries. And, when this thing was moving, it was blowing through our targets by 2 and 3 fold. So definitely potential there. But again, we are in a daily selling area. For me, I'm definitely, bearish in mindset. And the fact that we have, lower, failed highs, again, all this is screaming to me that I should be looking to get bearish. Again, the news for Brexit is tomorrow. So again, prepare beforehand. Don't get in after the fact. If you do get in after the fact and there's a large move, look more for a retracement. If you get a big move up, something like this, look for retracements back, right? Up, look for retracements. Okay, the whole ping pong effect. Now, pound dollar is the next one. Pound dollar is one that I'd mentioned last week. You guys should be, looking for touch brackets that kind of sample them if you hadn't already. Doing it in demo mode. You can see we had some large movement. This pair is up to 133 pip ATR. We had marked off this green area as a potential to the downside for a target. Price ended up going higher. We never got an entry for it with my students. But again, daily sell area, price collapsed, came back up again, down. This one, again, a lot of movement, very similar. Again, we're looking for kind of a break of this blue area. Looking for a break of 132.30 and 131.95 to take this one back short. Target is not as large on this one. We were looking at about 100 pip target back down to 130.97, 131 area right below. You want to front run this just by the way that this was formed. But similar picture. And again, this would be a pound weakness trade. So any indecision with the pound, with Brexit, it may be hard. It may not be good for the pound, or, we may be forced to use May's terms. Anything that seems like it's negative is what will drive this down. And it's going to be news-based. It's not going to, like I said, I don't think they're going to have a true kind of, this is what's going to happen tomorrow type scenario. All right. Let's go to dollar CAD. As I mentioned, dollar CAD on Friday has some news. Dollar CAD is a similar situation. I've been waiting for this trade to kind of break below the structure. It's bounced 2 times. The third entry is where you tend to see things break, number 3 and number 4. It did go back up and retrace off a basing level for me. I was waiting for price to, and again, this level was based off of the gap. We mentioned last week, same thing, looking to retrace the gap. It retraced and formed a basing level. Price came down, it hit, dropped, hit and dropped. I'm waiting for this third break below, and I'll be looking to get into a binary. This is something I'm also following on a 2-hour. That's what we did on this side. You guys will see a green box. Here's the gap candle. I'll make it a little bigger so you can see it. Okay, I was waiting to refill the gap. Price came all the way back. It refilled. It went through. It came back up and retested, and then broke through, and that's what I was looking for. Okay, if you guys follow any of our sessions, or if you guys have ever heard me talk before, I'm a very big believer in, there's a reason why there's areas of buyers and sellers. I call it supply and demand. It's not support and resistance. Supply and demand is different. But typically areas where there are sellers, when those areas gets broken, they flip and they become areas of, buyers, and vice versa. Sellers, buyers, buyers, sellers. The way you see these trades happen a lot of times is price will break through, come back up and retest, and then continue. And that's what we saw. And this was a smaller trade that we set up. So look for those things. So right now I'm looking for this to break kind of what it did here, but on the larger time frame. I want it to break this zone. If it breaks through, I won't be surprised if it retraces up, tags this, and goes lower. And again, on the daily, you guys can see it pulled back very, very far. Area of basing, sideways movement, looking for this to come back down to the 131. And again, this would be CAD strength or dollar weakness, okay, is what will control this one. Dollar Swiss, there is some news later on the week in the Swiss that will move this a little bit. This trade, we got almost out instantaneously. We said that we had basing. If we broke below, we wanted to take it. It literally spiked to the bottom and came back up again. I was waiting for a break of this blue, and that's what we just got overnight. Smack in the middle, I needed this to kind of determine a trend. It is finally proven to me that it is on a downtrend. It is coming into levels of buyers lower, but again, I wanted to see this retrace back down. I wanted to get back into this zone so I could start looking for longs. It needs to go a little bit more for me. I will not trade this pair today. There's just not enough volatility, not enough news between the US and the Swiss. But I'll be looking for trades later in the week, okay? Especially if we have another day down and we're ending, if we can break this base level, I'll be looking for this thing to come back down to the 99 range, about 100 pips below where we are now. Okay. Last but not least, we have the dollar pound. I'm sorry, dollar yen. So dollar yen for me has entered a range. Again, large parabolic move. We talked about this coming to the downside. It dropped. It bounced right off of this kind of lower basing zone. We did make a new high. I was hoping that we would come right back up again at the end of the week. I was hoping Friday we'd come back and retest this 112.14 to 112.16 or 112.60 area. We didn't quite make it there. And this one may have already started to start moving on us. We may be too late to the party on this one. You'll see that it's already pulled back down. It's already done some basing, and it looks like it's going to continue to push lower in this zone. If you were short in this trade, definitely be cautious of the 111.21 area. That's the last time we saw a parabolic move in this candle to the top side. And again, those retraced. We were looking to get short this one back down into the 110.80 range. We'll see. Mondays have not been the biggest movers for this pair, and today is not really I wouldn't say it's a chock full of nuts day for news for the dollar, but there may be some reactions to the weekend, and we'll see what it does. But I do believe this one will continue to push farther down. That's all I'm looking at right now for this one. I was really hoping it would go a little bit higher. Going into my planning last Wednesday, if it was up and it closed the week in this zone, I would have been looking at a weekly binary for that to come back into this area, into this 110.60 range, but we didn't quite get there. So I'm afraid it's already starting to flip and head back down again. I think we may be a bit late. I will be looking at 2-hour binaries, particularly to the short side, once the U.S. markets are open, about an hour and a half from now. We'll see where it goes. All right. So with that being said, that is kind of it for this Monday morning market breakdown. If you guys have other questions for us, you can always go to MajorLeagueForex.com. If you guys click, this is what the website looks like. There's a Discord button. If you guys are using Discord, we use Discord for all of our chat. It's a program that Microsoft has if you guys aren't familiar with it. Here's my Discord tag if you wanted to add me or ask any questions. If not, our chat rooms are free. You guys can jump in there and ask questions if you like. With that being said, I hope you guys join us next week. We're on about the same time. We will review the 3 largest news moves, and I will go through the charts. As I mentioned earlier, this week, the setups over the weekend were not as plenty, but hopefully it's just a lull in the markets, and next week we have a little bit stronger setups for you guys. All right. Thank you so much for joining today, guys. I appreciate it. Good luck trading this week. Watch your risk, and I will touch base with you guys next weekend or next week. Take care.